Hey everyone, thanks for tuning into our first webinar here at Liquid Trading. So, pretty much what we're just trying to do is talk about, who we are, what we're trying to do, where we're going, and really at the end of the day, what we can do for you guys. So, we've all seen this page of who we are. We have our philosophy on our Discord, and just to briefly summarize it, it says, we're a community-based chat room which houses a large range of investors with different styles, strategies, and experience. We host and provide a series and differing amounts of information to accelerate and enhance your researching, and to later send out different alerts for you. And the reason that we're doing this is because both Titan and I, and a majority of other traders in this room, have all experienced rooms where they're just pump and dumps, where people will just say, hey, I'm buying this stock, and then everyone follows the train, and then everyone follows out with them. And I want to help people find their own personal strategy that works for them, works for their life. A lot of people in here are, they either work full time, they're students, they have other things going on in their life around that time. So what we do is we help set up a strategy that's going to work for you. Now we have some services that we're planning on offering come May 1st, and our first one is going to be some screen sharing. So like right now I have some Thinkorswim scanners that I look at every single day. And initially I will be looking at those and screen sharing them to you guys at about a 10-second delay at worst. And what we want to do is we want to move into Trade Ideas. Now Trade Ideas is this great website that has very sophisticated tools, and I'm very excited to start using those. But just for a quick example, here is what we currently will be using. This is what I use right now. It shows all of the scanners that I look at, and initially when we go live, I'll naturally have a legend to let you guys know, what these things are looking for. And if you remember, you'll actually be able to grab the information that we use and the metrics that we use and turn it into whatever you want. So if you see one thing on here that you like, but you want to have another metric added in, you'll be able to do that with your own scanner. So, oops. Next, what we have that almost everyone's seen already is we have our morning alerts that Titan posts. That's all based on pre-market scanning. And then at the end of the day, we have a series of swing alerts. Titan only does penny stocks, and then regular small, mid-cap, large-cap stocks, only long side trading. I like to be a little bit of a bear myself, so I do long and short swings, and that's not a time basis. That's based on buying or selling the stock, and then naturally throughout the day we will have intraday alerts. What we want to do at the end of the day is we want to help you. We want to help you figure out what works for you and why it works for you. We want you to fully understand your strategy and to get there as quickly as possible. Now, we've had to do this with a lot of people. A lot of people come in and they've never done any trading before. They've never done any scanning. And that's a really big part of trading. So we like to also help people set up their scanners, set up their brokerage, setting them up with all the indicators that we use, and we'll go over that later. And then we also, just like I've said before, help build that strategy that works specifically for you. I know Titan and I have a little bit of a different strategy. Mike, one of our moderators, has a very different strategy where he's just scalping mid-cap stocks for 10 to 20 ticks, and he's very successful at it, but I could never do that, and I don't think Titan has an interest in doing it. But it works for him, and that's what we like about this room, is we have different people looking at the same thing and seeing different things out of it and getting those different things. Now, I'm always here to answer questions, to explain things. We do our daily recaps on those morning alerts. I think I'm going to start doing a monthly recap on our swings. I've started collecting some of the data for that. And then whenever people are asking for information in chat, Like, what do you think about this? I'm considering making a position on this. Here's what my strategy is currently. How do you think that's going to play out? And I know I like to help people do stuff like that, and I know Titan's interested in doing stuff like that, as well as the majority of our moderators, and as well as all of our members. It seems that we all like the collaboration, and I think it's really a unique thing that this chat room actually has, because we actually do it. Now, let's talk about some of the indicators that we actually use. We all use the VWAP, which is also called the volume weighted average price. And this indicator is very important because it's, in my opinion, one of the strongest support or resistance lines on an intraday chart by far. A very common play that we will make is called the VWAP bounce, which is where essentially after it pumps in the morning, a stock is going to start coming back down and it's going to hit that VWAP price. And that VWAP price is typically the first time it's going to hold it. And it's going to bounce back up from there. And sometimes it will just keep on rallying. So the VWAP is a very important indicator and metric to keep an eye on. Now, the EMA, or the exponential moving average. These are ways to calculate the trend of a stock and what it's doing throughout the day. So we use 3 different indicators of the exponential moving average. We use the 9-day, the 13, and the 20. Sorry, not the day. It uses candlesticks to calculate that. So the shorter the exponential moving average, or the EMA, the more volatile it will be and the quicker it will react to the new information that's being brought in. So the 9 is going to show you the most recent trend, the closest trend, and the 20 is going to show you the trend overall. Now, the simple moving average is a much more simple way of calculating it. We use the 500 and the 50 and the 200 mostly for swings. We use them on the daily chart because what we like to look for with these simple moving averages is what's called the golden cross, which is where the 200 simple moving average is above the 50, but the 50 is crossing above it. We like to call that the golden cross. It's a pretty common phrase, and it works pretty well. So moving on, we have the TTM squeeze, also known as the Big Bird. Now, we call this the Big Bird because, let me pull up my Thinkorswim here. SUIP. Because of these bars right here. So this right here is the TTM squeeze. Now you'll see a bunch of different colors of bars. You see dark blue, red, yellow, and then also there are some light blue bars. Let me see if I can find a better example. Titan, what was a good stock on Friday that had a good Big Bird setup?
Not much for mine. Look at a NADL for Thursday.
NADL for
I
Thursday.
had a couple of them.
Okay, so let's go to the 5-day, 5-minute then. So here's the stock on the 5-minute chart. And what we look for is the Big Bird, which is it's 2 of these yellow bars here forming from a red. And why we like that so much is because the TTM squeeze uses both the Curtinal channels as well as the Bollinger Bands. And this is essentially determining if a squeeze is about to happen. And it works really, really well in the room, especially on the shorter time frames, like the 1 and 2 minute. The 5-minute, if you see the Big Bird forming, it's mostly too late and it's already happened on the 1 minute. That squeeze has happened. So let me pull it on this day, but let's use the 1 minute to get that good example. So you see here, actually, in the morning, it didn't even get that big bird. It started off with these bright blue bars. Now, these bright blue bars are also really good because that means it's increasing from the previous bar, which shows that the squeeze is happening. So you'll see here that with the MACD crossover, which we will discuss later, as well as the parabolic SAR, which we'll talk about briefly later, combined with this TTM squeeze indicator, you'll see an entry point at 215 this morning, and it goes up to 324 later in the day, quite recently, within an hour. So the TTM squeeze is honestly, I'd say, the bread and butter of our intraday stock price movements, and we use it quite frequently. Now, the MACD is the moving average convergence divergence. It's a very verbose way of forming a stronger trend. Actually, I've hyperlinked all these things. I can post this into the chat room if you guys are interested in reviewing this yourself later. But it's another trend indicator that shows entries and exits that you can make. So it's just another way to indicate if it's a good entry or if it's a good way to exit. So when it's crossing up, that means that the current trend, the faster paced trend, is superseding the slower trend. So it's a good entry. Whereas the inverse is when it's crossing back down, because that means the general trend is doing better than the current trend. So it's kind of like buying the dip in some situations is what the MACD can be used for. And it's just another way to determine the strength of a trend. Now we have the parabolic SAR. So what the SAR stands for is stop and reversal. It's a good way to determine the reversing of a trend. So you'll see on my Thinkorswim these blue bars, or these blue circles, these dots. Now you'll see the dots are underneath the price and then they'll flip above it. When that dot is flipping above or below, that is showing that there is a reversal happening on, that 1 minute chart or whatever chart time frame that you're using. And that's good to know, because you don't want to be there when the chart is flipping and you're on that position. You want to get out of that position normally when that parabolic SAR is flipping on you. Now, this includes things like the RSI, the average true value range, and it also uses the directional moving average, which we don't talk about a lot. We talk about the average directional movement, but we don't talk about the RSI that much unless we're swinging, and I don't believe we've ever really talked about the average true range. But the parabolic SAR is another great way to use in conjunction with your MACD as well as your TTM squeeze for the intraday. At least that's what we currently are using it in the room. Now, what I'd really like to see is people taking all these metrics, figuring out, well, yeah, maybe I like to use it with the average true range. Maybe I like to use it with the RSI. And then what you do is you form your own strategy with it. So next up, we have the Fibonacci retracement. This is kind of a random thing that works because other traders use it. So what we've done, or what really Titan has done, is he has done an excellent job of programming a script that whenever you enter a stock, it will draw these Fibonacci lines. If you're not familiar with the mathematics of Fibonacci, I highly recommend you look it up. It's pretty interesting stuff. But what it does is it takes a 100% value and a 0% value, and then it fills in these retracement values based on that. And these tend to act like resistance and support lines, especially when they line up with other price points. Like you'll see here on NADL at around 1138, it hit that retracement level pretty well right here, and it bounced right off of it. It seems initially like it's just arbitrary and it's just a matter of chance. Yeah, it hit a bunch of other places, but you'll find this consistently happening when you're making these day trades. And then we have some basic candlestick patterns that we look for. Normally we'll use these with respect to swinging because they're much more reliable and noticeable. So we have the hammer, the shooting star, and the three white soldiers. Now the hammer and the shooting star both look the same. They're just upside down of each other essentially. So for the hammer, it's just a candlestick pattern that looks exactly like a hammer. So I wish I had a better image for this. Okay, so like here, for example, is a great hammer. It has a very small body, a little bit amount of high, a little bit amount of wick above the body, and then a large amount of body underneath it. That's what we would refer to as a hammer. Now, a shooting star is, like I said, just the opposite of it. So here, when I actually said to enter the swing on Friday, was because it had a hammer, and then afterwards I had a shooting star. So these two in conjunction with each other are typically very strong because it's indicating a very strong support line. So you'll see here that it has a very small body, it has a very small lower wick, and then it has a very strong high wick. And you'll see that it started the trend off in the day, and then it died down a little bit at the end. And there's nothing wrong with that. And then finally we have the three white soldiers. I think we had that on CDTI. Yep. Not really. Cali. I think Cali had one forever ago. Okay, here's an example. So here's a pretty good example of the three white soldiers. It's just three pretty strong green bars right after each other to indicate a reversal of the trend. You'll typically see it with a downturn, and then it's a good way to show a reversal is by having these strong 3 days in a row. A lot of swing traders are going to be looking for things like both the hammer, the shooting star, as well as the three white knights. With respect to intraday trading, I personally can't think of too many candlesticks that we use other than, I don't know, Titan. Do we ever use like the head and shoulders or the cup and handle? I know there are a lot of rooms that use it. I know there are a lot of people in the channel that use it, but predominantly I don't think there are too many people that use it in this room.
Yeah, we'll occasionally look at those patterns in the intraday setups, but as far as the individual candlesticks, not usually.
Yeah, but just a quick example. I mean, here is what the cup and handle is. I know someone said that they saw this on CDTI the other day. It's essentially a pretty strong run. There doesn't have to be a strong run initially, but it's this very strong dip that recovers, and then it starts to essentially create this bullish flag afterwards. And then that bullish flag typically breaks out into a pretty strong run again. You don't see this too many on the stocks that we look into. We typically look at small cap and mid cap stocks, and they don't normally react this way, which is why we don't see it that present. But on large and mega cap stocks, it's a pretty common setup that people will use for option trades or like scalps. And head and shoulders, just show this while we're at it. So the head and shoulders is just basically, it's a strong run, it hits a support line, it bounces off that support line, hits a new high, then bounces back down to that same support line, and then kind of fizzles out the rest of the day. It's just a way of saying, hey, I want to get out here because I can see the shoulders forming right now, and I don't want to get caught underneath the support line. Outside of that, though, these are the main indicators that we use. I can't think of really any off the top of my head. So at this point in time, that's really all that we had. And we did have one question come in. And that question was, let me see where to go. He was asking about stock floats and what the float of a stock is relevant to. So first, let's talk about what the float of a stock is, because most people don't know that what it is or what it means. And what's interesting about stock float is it's the shares outstanding, so it's all the shares minus insider ownership. And that's important because that's actually saying, hey, how many shares can actually be traded today? Because if it's insider ownership, they essentially have to report if they're going to sell these shares, and they're typically very illiquid. Most of the owners aren't selling and buying shares of their own company every single day. At least I hope not. So that's what the stock float is. And he asked, what do I need to be thinking about in terms of amount when it comes to volume? Apple versus a much smaller cap biotech, for example. Maybe Titan, you could answer that question a little bit better than I could.
Yes, I'll elaborate a little more. Basically, stock float comes in play with volatility. So the lower float of a stock, the more volatile it's going to be. What that usually means is for stocks that have a low volume and a low float, they typically trade within a small range and they don't move much until there's news. Once you have news on a low float stock, everybody wants in, there aren't that many shares to purchase. The stock just shoots in one direction until the buying's completed, then usually shoots right back down. As far as comparing to the larger cap stocks like Apple, the shares to go around, so it's much easier to buy a piece of Apple, and therefore the price is not going to move as much in one direction with the ease of shares and the sheer amount that are available.
Yeah, that definitely pretty much sums it up. That's a great answer, actually. Now, if anyone has any other questions, feel free to either type it into the live chat on YouTube or into the Liquid Trading Discord. Otherwise, I think we can call it here. We're about 45 minutes in. I'm sorry, 24 minutes in. And we just wanted to just get this started off. I think we're going to try and do this about once a week. I'd like to do it on Sundays. I think it's a good time to do it. Start the week off right. I think maybe as we get better and better at this, we can start talking about specific things. We can start talking about the following week, what type of news we should be looking for, things of that nature. And then also, Titan, could you maybe touch up on those nightly watch lists that you seem to do around 9 or 10 o'clock every night?
Yeah, no problem. So I'll kind of go over a little bit of what I look for every night for an item to make a watch list. As Gage had mentioned, we use TOS for our trade platform, Thinkorswim. So most of what I discuss will be in that platform, but all of the information is available in other platforms as well. So one of the main things I look at first is the after hours movers. That's a section of TOS that kind of lets you see everything that's happened after hours. Now, the good thing about that post is it doesn't just show the trades that are happening after hours, it shows any stock that has news after hours. So really, I just bring up that list and go through all the stocks that are under $20. If they did trade after hours, what the trading activity is, and two, if they had news, what that news was. And then depending on the news and the trading activity, that's how I decide whether that will make the watch list. In addition to those, I also go over my normal scans. So the scans based on the indicators that were previewed earlier. So we'll look at those indicators, like still looking at the TTM squeeze, the three white soldiers, any other indicators that swing potential, and then the chart lines up. We'll still put those on watch for the next day. Usually over that previous day's high is a good entry indicator. Those are the main things that get the watch list going. Additionally, I'll look at some other news outlets just to see market trends or whatnot, to see if there's anything as far as like a ETF, like gold or oil, or even the VIX for that matter.
Yeah, and that's a pretty good point at the end there. One thing that we do like to talk about while we're intraday trading is what the overall market is doing. Uh, Once I read that, if one index is going up, then 3 out of 4 stocks in that index are also going up. So it's really smart to know where the intraday support and resistance levels are, as well as the daily intra and the daily support levels are on the macro level as well, where the overall indices are trending, where they're going, where you don't want to be trading. A lot of people, Mike, for example, is a scalper in here, and he doesn't trade like at all unless there's a very specific setup happening in the market with the TVIX and Apple. And it's a very proven thing that works specifically for him, and it's very interesting. And so what we also do touch on, what the overall markets are doing as well, because that will definitely help you figure out how you're going to be trading. Some people are really strong on certain days, like Titan. Maybe you can touch up on how, just at the beginning of this year, you realized what days you were the most profitable in.
Yeah, so unfortunately, one of the common themes people will notice Thursdays, most of the days I work from home, and those are actually relatively slow days. A reason for that is a lot of market indicators are sent off on Thursdays, a lot of news, like housing starts and unemployment and all of that's on Thursdays. So those days tend to be a little slower unless the news is drastic, and then they'll run in one direction or another. Typically, for the most part, Fridays are a little slower like you're used to. But in all market conditions, you can still find a reasonable trade as long as you stick to your strategy.
Right, and didn't you realize that you were doing best on actual down market days because you found that when you were screening through your stocks, that all your potential plays that you had, that the strongest ones would stick out much more easily during those red days.
As far as the win percentage on down and flat days, I have a higher win percentage. And it is for that reason because my strategies, I don't get in until there's confirmation. And there isn't going to be much confirmation on a down market day. So to your point, those are the days I actually tend to have bigger win percentages. Now, as far as profit percentages, those are all given by the stock. So a stock can run in a down market or a bull market. It's just
Right.
a matter of the performance of that stock.
Well, all right. I think we haven't had any more questions come in. So I think for this first week, I think this went pretty well. And I'm planning on doing this next Sunday. And I guess until then, we will see ya.